Hey everyone, welcome to my channel. I'm Doris and I'm here to share with you about my stock account update. Today my account earned $547 and US stocks closed mixed with Goldman Sachs dragging the Dow Jones Industrial Average down. So let's take a look at my account. Today's right now the net asset of my account is $84,856 and today, including the aftermarket, I've made a profit of $496.83 with a gain of 0.59%. This is because XQQ in the post-market price, it rose 0.87% to $46.01 and the RV rose 1.18% to $43.88. As for the market today, in general, market did not change by a lot. Most of the industries varied in between -1% and +1%, except for auto manufacturers increased by more than 3.5% today. Today, Dow Jones Industrial Average decreased by 1.14% to $33,910, and Nasdaq Composite rose by 0.14% to $11,095.11. S&P 500 decreased by 0.2% to $3,990.97. Investors are reviewing the latest earning results of big banks such as Goldman Sachs and Morgan Stanley and continue to focus on the risk of a U.S. recession and the Fed's policy outlook. A number of large banks continue to report earnings. Goldman Sachs share closed down 6.46%, becoming the biggest faller for the Dow Jones 30 component. After the bank reported its worst earning decline in the fourth quarter, Goldman said its results were under pressure from falling revenues from investment banking and asset management. Morgan Stanley beat expectations, thanks in part to record revenue in its wealth management division. The announcement followed a mixed result from JP Morgan Chase and the Citigroup and other big banks. Then we're going to talk about the recession. As of Tuesday morning Eastern Time, about 77% of the S&P 500 component companies have reported earnings. Of those companies, 70% of earnings beat expectations. United Airlines will report its quarterly result after close on Tuesday. Enter 2023. The U.S. stocks market has recorded 2 consecutive weeks of gains. In the first 2 weeks of the new year, the Nasdaq rose 5.9% as investors bought already battered technology stocks as the outlook for growth stock improved. The S&P 500 rose 4.2% and 3.5% respectively over the same period. Investors see the first batch of inflation-related data this year pointing to a contraction in the U.S. economy, but they'll also give the Fed a reason to slow the pace of rate hikes. Last week, the December Consumer Price Index showed that the price fell 0.1% from the previous month, but was still up 6.5% from a year earlier. Economists also widely see the risk of a recession this year, and that many companies could accelerate layoffs in the second quarter. According to media's latest quarterly survey, a 61% recession this year. According to a survey of 71 economists in business and academia, there is a 61% chance for a recession in the next 12 months. That probability is down 2 percentage points from October survey, but remains at a record high. 3/4 of respondents believe that while the Fed expects to reduce inflation by slowing economic growth rather than shrinking across the board, the Fed may eventually be unable to adequately address the problems of excessive rate hikes and underinvestment. The expected soft landing for the economy may not happen, and the high inflation and the Fed's policy efforts to curb inflation will be the biggest risk to the economy this year. The survey also shows that GDP is likely to grow just 0.1% in the first quarter, expected to shrink 0.4% in the second quarter, zero growth in the third quarter, and 0.6% in the fourth quarter. For all of 2023, the U.S. economy is likely to grow by just 0.2%. According to the survey results, there is a debate over whether and when the U.S. recession will come. ZipRecruiter chief economist Julia Pollock said, "I don't think that this issue may be more uncertain and more hotly debated than any time in the U.S. history." EY Pathidon chief economist Greg Dacko said, "While U.S. services activity remains strong, the housing sector is falling under the pressure of rising mortgage rates and manufacturing activity stalling, both of which suggest a broader economic downturn may be imminent, which is why I'm buying DRB right now." That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.